Hey, I'm Abby Foster, ACA Chartered Accountant and Finance Content Creator, and today we're talking about credit cards. I know a lot of people fall into one of two camps when it comes to credit cards. You either love them and you use them for every purchase, or you hate them and you never use them. But the thing to understand about credit cards is they're mainly just a financial tool. Used correctly, they can help you protect your purchases, earn cashback, and even improve your credit score. Used incorrectly, they can leave you in debt for years and years. So today, I want to bust some of the myths when it comes to credit cards. Myth number 1, the minimum payment is designed to help you clear your debt faster. False. This is one of the most dangerous ones out there. The minimum payment is exactly what it says it is. It's the minimum payment your credit card provider will allow you to pay each month before they've basically assumed that you've missed the payment. Let's imagine you have £3,000 on a credit card. If you only paid the minimum payment, it could take decades to wipe this with the minimum payment and the interest and late payments that you may be paying. I think one of the main reasons people get caught out by this is the psychology that it feels like you're doing the right thing because they've offered for you to only pay the minimum payment. So then if you pay that, you've done the right thing. But in theory, you really want to be paying the debt off in full every single month. Myth number 2, paying your credit card off early saves you nothing. Absolutely false. The quicker you pay off your balance, the less interest you're likely to pay. So interest is what the credit card providers will charge you if you basically don't repay on time because you're borrowing from them. That is how credit cards work. Versus a debit card, obviously your debit card is where you put money on that account and obviously what you spend on there is what you put in there. A credit card is you're borrowing from the bank and then repaying that, hopefully in full, every single month. It's like an IOU. And credit cards come with a balance. Usually when you start with a credit card, usually the balance is quite low. And as you prove to the banks or the credit card provider that you are good to lend to, they tend to up that credit card limit. They do this for a number of reasons. Obviously, one, it can be good for your credit score because as that limit increase, if you don't match it or don't keep going up with it, if you keep your credit utilization under 30% of the total credit limit, it can actually be really good for your credit score. But for them, they know if they increase that limit, you're tempted to then spend on there and then they can obviously basically make more money through interest and things if you do max out that credit card. So be really careful. But the interest itself is obviously the money that they will charge you if you don't repay on time. So if you do pay your credit card off early, that means that you've wiped the debt and there should be no interest to pay whatsoever. It's personally how I use my credit card. I don't use it ever to plug gaps in my income. I use it as sort of like an everyday spending for the protection, which we'll get onto in a bit. But I then make sure that every single month it's wiped clean. I never use it to kind of plug gaps that I don't have right now to spend. You might hear people online talking about things like points and cashback and all the positives that you get with a credit card, but don't go chasing those points or those cashbacks whilst forgetting that actually this credit card needs to be paid off by you in full. Because, getting a £50 cashback is not worth hundreds and hundreds of pounds worth of interest if you can't repay what you've borrowed. Myth number 3, Section 75 only applies if you pay the full amount on your credit card. False. This is one of my favorite facts when it comes to credit cards because so many people don't realize that this exists. Section 75 is a protection that you get on purchases that you make on your credit card between £100 and £30,000. So if something goes wrong with the product or service that you've bought through your credit card provider is jointly liable with your retailer to get that money back. Now, what most people don't know is you don't have to pay the full amount on your credit card. So let's say that you bought a £3,000 sofa, but actually you only paid the £100 deposit on your credit card, but something's fundamentally faulty with the sofa and you're trying to get your money back, but the retailer's being a bit difficult. You can actually employ Section 75 and get your credit card provider involved as well, even though you might have paid the rest of the £2,900 of the sofa on your debit card, because you paid at least £100 of it on your credit card, they can get involved. This is one of those classic facts where it's really important to understand consumer protection as well as your financial education when it comes to purchases. Myth number 4, being rejected for a credit card doesn't matter. Unfortunately, it does. Being rejected for any debt can impact your credit score. In the UK, we have 3 credit rating agencies, Experian, Equifax, and TransUnion, and each of them give you a credit score based on your credit profile. So this is stuff that's built up from age 18 to however old you are now. And it's things that have happened in your life that show banks or these credit providers how good you are to lend to. And being rejected for debt can have a knock-on impact on your credit score because it basically looks like to the banks and the credit card providers that you aren't good to lend to. Now, don't get me wrong, one rejection is not the end of the world, but if you are applying for credit cards, you can use these soft checks to see which ones you might be eligible for before you apply, so that you don't apply for ones that you're definitely not going to get. Myth number 5, you should never use your credit card for everyday spending. This one does come down to the individual. I personally do use mine for everyday spending, but I keep a seriously tight check on everything I'm spending on a week-to-week basis, really, because I use my credit card to make sure that I'm building points or I'm getting the cash back, because there's lots of positives that you can get from a credit card, such as rewards like points and cash back. But if you're someone where you think this everyday spending on a credit card could lead you into a bit of a spiral where you're unsure about what you're spending, don't do it. Mainly use your credit card for things that you know you're going to spend anyway, and it gives you maybe that Section 75 protection. I always think it's really important to maybe use credit cards when you're buying holidays, like a service-based holiday or a specific big product like a big sofa or something like that, just so that you have the protection in mind. So the big takeaway here, credit cards aren't evil, but they're not magic either. Used correctly, they can help you with protection from Section 75 and rewards and bonuses, but if used incorrectly, it can land you in tons of debt for decades and interest that you're just spiraling out of control. And when it comes to choosing your credit card, make sure you compare. So you can use Compare the Market to do this for your credit cards, but always make sure that you check your eligibility as well, using that soft search that I talked about before.